we're talking about something that every single trader faces, especially in the small cap market, and that is how to handle a constantly changing market environment. Markets are inherently unpredictable, and if you are not adapting, you're falling behind. So stick with me here, and we're going to talk about how to identify a changing market, how we go from a hot market to a cold market, or a cold market to a lukewarm market. We're going to talk about that, identifying those markets. So if that sounds cool, stick around here for this video. Let's get into it. What's going on, everybody? Dom here from Clover Trading, right here on the Clover Trading YouTube channel. So let's talk about changing market cycles, changing market environment. What is the temperature of the market? That's what we kind of call it sometimes when we're doing Good Morning NASDAQ and we're talking about it on a Monday morning. I think it's really important that small cap traders especially are aware of the type of market that we're in. When I'm currently making this video, we are in the midst of a period of time in which the market has just gone from very warm, lots of opportunities, sector momentum everywhere, continuation on the daily charts, things running multiple days, lots of volume, good news, good catalysts out there. You know, I could go on forever with all the reasons why something is a good market. When we dramatically shift and all of a sudden stocks aren't running more than a day, the amount of runners that we have as a whole is dramatically less. The amount of 100 million, 200, 300 million volume days that we're getting out of stocks is vastly lower. When we're just not getting continuation, we're not getting runners, and the amount that we're getting is way lower, and we're not getting sector momentum, and the overall market is choppy. That's either cause for concern, and this is kind of how I want to start this, either cause for concern or cause for just adjusting our own expectations for the market, our own expectations for our performance, and how we need to handle that. And so the way I kind of want to start this is, you know, there are two very different things you can do as a trader as the market changes. Maybe which type of people are more likely to do one than the other. Myself, I'm a very big picture type of trader. I start with the daily chart, and then I work my way slowly from the daily chart to an intraday, maybe a 15-minute chart over the course of 5 or 10 days, down to like a 5-minute chart, down to like what is going on right now on the intraday. To have success doing that, there needs to be a lot going on. I need daily charts to be developing. I need them to not have massive resistance everywhere on the chart if I want them to be able to run. I need them to have level like continuation. I need them to go from 1 to 5, but then make that secondary move from 5 to 8 to really open up the door for a lot of different patterns to take place. So the market generally has to be warm enough so that we are getting a good quantity of runners, but also that the quality of some is really good. And that usually comes when we have extra momentum in the market, either due to a specific catalyst, either due to a sector being hot over the or the overall market trend just being so consistent, either bottom left to top right, or in a consolidation phase to where people aren't really constantly worried and on edge, and there's a lot of selling in the overall market, and there's just not as much volume being pushed into the type of stocks that we're trading. So when coming from a big picture perspective like that, a lot needs to go right consistently to get the high quality opportunities that I look for, where I can risk very small and make a lot. A lot of what I've done over my career is not necessarily ignore changing markets or new market environments, but understanding that, you know, if I'm a first green day breakout buyer and I short first red days, there is every month or two or every couple weeks or enough times throughout every single year that I trade. And some years I'm going to get extended periods, months long versions of lots of big daily chart setups. And I'm going to have a lot of periods where there's not a lot going on, whether that's multiple days, multiple weeks, a month plus, a whole summer or whole season of the market, whatever it is. Each year is going to be different, but I'm always going to get my opportunities at some point. And if I expect that to be true, then all I need to do is trade the same way as I always trade, except that I'm going to have periods where I trade often when the market is hot, and whether or not I identify that it's hot or not, if I just look for the same type of patterns from a technical perspective and trade that way, I'm going to find periods where I make a lot of money and periods where I don't. And I have the basics figured out when it comes to risk management. During those periods, I'm just going to take significantly less trades because my criteria is not showing up for what I deem an A or A plus type of trade. There is a way to go about this by being very ignorant, by being very, not necessarily stubborn, but just showing up every single day, maybe not forcing yourself to think about all this extracurricular stuff, all this macro stuff that's going on in the world with elections and news and events taking place across the world and across the country, and just letting it be what it is. And if in those certain situations I get opportunities from it, or in some situations I don't, I am none the wiser. I'm going to take the trades that are in front of me, and I'm going to take them the way that I know how to trade, which is to buy a certain way, sell a certain way, and all of that primarily stays the same. That is an option, and that is something that I've employed during a lot of my career, just because I am someone who is a very streaky trader who does really well when the market is there for me, and generally either sideways or poorly when the market is not there for me. Another approach you can take to the world of small caps or mid caps, or I guess anything in the market, is understanding that there are going to be different markets all the time. Whether we're looking at it from a yearly perspective or a month-to-month perspective, 2020, 2021, we pretty much just got 2 years of a really strong market. It was obviously a lot different out in the real world and what was taking place, but what we were getting when it came to the actual stock market in small cap land was opportunities galore. Breakouts working, going much higher. First red days, losing 40, 50% in one afternoon. First green days, stocks bouncing back after insane moves up, insane moves down. And now even on the backside, they were bouncing significantly, sometimes even going higher and breaking out. That period lasted a long time, like multiple years. And it was very rare that we had a lot of slow periods, because it just went from one sector to the next grouping of stocks, to the next grouping of stocks, to the next grouping of stocks, and we continue to have momentum and we continue to have opportunity. And then there are certain years, when you look at last year, 2024, where there's pockets of really great momentum. There's pockets of really high volume stock, times where stocks are gapping up the next day and gap up the next day. Stuff where we have cheap stocks like FFIE running from sub 10 cents to $4, and shorts getting squeezed galore in the middle of the summer. But there are also periods where weeks go by or a month goes by and we don't really get those A quality setups, and there's not the quantity of big high volume runners taking place. We can understand that the market is constantly changing. We're either in a good cycle or not a great cycle at any given moment in time, and it is up to me to decipher what that is and to adjust my plans based off of that information. If we're getting massive runners, if we have lots of volume, if a sector is responding well and is hot, and every single day we get a new stock popping up in that world with that same type of catalyst, or that people are tying to it because of information that's in their profile on the internet or dilution tracker, in their filings, whatever it is, and recognizing that the momentum is going to continue to shift and shift and shift, and I can focus on trading a specific way during that period. And then the second I see that market shift and we're not getting as many gappers, we're not getting as many multi-day runs, or something big happened in the world that I was watching. Let's say that the market's hot for 3 weeks because of energy stocks, but some bad news comes out or some news changes and all those stocks significantly gap down. We saw that at the end of 2024 into this year. We were in a great cycle. RGTI, quantum stocks, goes on a huge multi-day, multi-week, multi-month long run from the 1s to the 20s. QUBT followed up at different moments, and that run became the leader, became the strong stock. And this stock goes from the 1s up towards 30 as well, a really, really big run. Obviously, moments where there was more volatility than others, ended up kind of holding itself together and consolidating while RGTI was running. But you also had QBTS go on a nice multi-month run where there was moments where the patterns came to play, where we had multi-day breakouts, where we had first red days. And then you had QMCO, which was a lagger one in that industry that goes from 4 all the way up to into the $90 area. But in all of these charts, you can find a very important moment when it was, okay, quantum stocks are what we're watching every single day. Where are they at in their cycle? Are they breaking out, or should they be pulling back? What part of the move are we in, and what should I be looking for? We went from that in a blink of an eye to, okay, the entire market is shifting. The entire market of quantum is taking a break. All the stocks in that sector are down, from the top ones to the lower level ones. And it's very clear. And I don't remember exactly what it was, but they finally reacted negative to some short report, some news, whatever it was. And overnight, you see RGTI goes from consolidating up near the top end of its range to being down a couple days later from 20s down to 6. And, QMCO goes from up near its, whether we're kind of deciding, is it going to break out? Is it going to break down? To in a moment, down from the 50s, down over 50%, down towards $20. And the same thing, it didn't matter if these stocks were breaking out and going higher like an RGTI, or they were stuck in consolidation phases and we were still in that are they going higher or are they not phase. They all broke down when this news came out, when this report came out, whenever the momentum shifted. There's a clear and concise moment when that happened on these stocks. And it just so happened that when that happened at the beginning of 2025, a lot of the momentum was taken out of what was holding up the small cap sector, which was quantum, which was, moments where if it wasn't quantum stocks, it was robotics. You had stocks like RR going multi-day, multi-week runs, ARBE, really insane moves, MBOT, different sectors were coming about from the quantum, and it was continuing to give us momentum. During that stretch at the end of 2024 into 25, we had stuff that OTCs running. This is a big indicator for me as well in small cap land, is when we are seeing increased runners in OTCs, which have predominantly been dead for years and years since 2020 and 2021, when those are popping up and following sector momentum. When just old runners like Fannie Mae is going on big runs in this time. We are at that time, a really hot cycle. And understanding that when the cycle starts, what does that look like to when the sector dies, or when the market as a whole in small cap land, the momentum really shuts off and we go into a period of days, weeks, or months where the opportunity just isn't there. And knowing what that looks like from obviously big picture data charts, doing massive volume, it bleeding down into other sectors, bleeding down into different price ranges. We have a lot of lower price stocks running. We have OTCs running. The market is super there with the opportunity to what it feels like in moments. And I remember this, week, very middle of January, like the third week in January, all of a sudden there was just nothing. There was no opportunities. There was nothing to keep a third eye on that we talk about in Clover. And we just sit back and we wait. And so what are some of the things that we want to do in these constantly changing markets? We want to kind of have a game plan for when the market is hot, when the market is there, how do I want to approach it? For me personally, when we are in a market that I really like, where we have the volume, we have the momentum, how do I want to be trading during that stretch? And how do I want to maximize my reward during those periods of time? A trader like me, who's trading big picture data charts, who really wants there to be lots of momentum in the market, has to realize, just as though you're looking, engaging that momentum over the course of a year on any given year, understanding that there are pockets of that momentum, I have to realize that there are 5 opportunities a year in terms of these hot markets. Most years are not going to be 2020 and 2021. How do I want to trade during the period of time where we are getting a strong market, so that I can maximize that opportunity, and I only need 2 or 3 of those a year to really make my year? We talked a lot about this over the past few weeks in Clover. As the market kind of transitioned into a colder one, I don't usually have regrets during the cold periods, because those are periods where for me, I really want to just be hands off. I want to do a lot less, increase my criteria. What constitutes an A or an A plus type of trade? So I want to increase my criteria when the market is slow, and I want to focus on the best of the best, because even in slower markets, we do still get opportunity. Fannie Mae was towards the tail end of that of where the market was hot in January, and it continued to give even opportunities to short this bounce into the breakout level. We also had recent runners like BBAI, which the market isn't lighting up hot right now, but this is one opportunity on a huge daily chart breakout over this 520 area on news of a contract, whatever it is. And look at the volume that's going with it. Over 250 million shares. Even though there might not be a ton to watch in this slower market cycle that we're in, if I increase my the criteria of what constitute a good trade to the best of the best, it needs massive volume. It needs a catalyst. It needs to be a former runner. And we had that there with BBAI. So it's not necessarily that I'm either all in on trading or I don't do anything. It's that I'm tweaking little parts of my game to match the cycle that I'm in and the environment that is there for me. So we've talked a lot about the changing market cycles and how to go about it. It really is just about what works for you. There is no right or wrong answer. The game is about profitability and being good at the game of profitability. And sometimes that means changing a lot of things about the way we trade. Sometimes it means just chugging along, trading what's on our watch list, trading the same forever, and understanding that there are periods where we're going to do really well and periods where we're not going to do as well. All right, well, that was all about changing market conditions. I hope you guys enjoyed it. If you have any questions, leave them in the comments or reach out to us in the room as a 3 or 4 leaf Clover. So head on over to clovertrade.io if you want to learn more from me, Huddy, or Kyle. Have a wonderful day. Thank you guys for spending a little bit of time over here at the Clover Trading YouTube channel. My name is Dom, and we will see you in the next one.